Hello, everyone. Welcome to Smart Investing. My name is Albert, and today's video is going to be about the automobile sector. I think this is video number 6 or 7. It's been so many months because I've been busy, but here we go. Again, I'm not going to do a lot of stocks, so this is going to be just a quick overview on these 4 stocks for the automobile sector. So we're going to continue that series that I was doing from like 5, 6 months ago. So we have the 4 stocks. We have CPS, AXL, GTEC, or also known as GTech, and then UCAR. We're going to start from the bottom and work our way up. Today is May 7th, and markets are open. It is 12:47 p.m. First stock up, we have UCAR, ticker symbol UCAR. The company name is also known as U Power Limited. This is a Chinese based company. Obviously, they specialize in motor vehicle wholesale. We're going to do a quick overview and then just try to move on to the next one. So, this might take a few minutes. Share price is at 2.80 cents. So, 2.8. We have the earnings that are negative. Market cap at 11 million. The volume is very low at around 28,000. So right away, this tells me this is a stock that really can't be traded. We have the 52-week high and low. Uh, $7 difference, just about. That's not a really good range to go from. Uh, what else am I looking at here? Shares outstanding. I mean, it makes no sense to even looking at this stock as a trading perspective. Or let's see if we can look at this fundamentally. What can I do with this stock? I'm not seeing anything pretty good. So institutions, it doesn't look like institutions are even involved with this. Corporations, obviously the people that already work there, that's like management from corporate. Maybe they have shareholders from the outside. Who knows? We have some insiders. And then other people could be investors, obviously, in the open market. Uh, let's see. Not much. You have insiders here, so we have no change. No change whatsoever. You could look at that, but it's not showing much. Institutions. So a lot of decrease. Oh, it doesn't say the date on it. I don't know. Again, timing for me is crucial. So some people, they say uh, time in the market beats out timing the market. Well, I generally do both, and it helps to actually know the information and researching it instead of, you know, not knowing what's going on. Uh, but it does take dedication when it comes to timing. So, looking at this stock, not much is going on. From a chart perspective, let's look at the 5 year. You see how high it was in 2024. Obviously, stocks are insanely overvalued, and they still are. Clearly see from almost $1,000 all the way to like almost nothing in a span of like 2 years. The 1 year chart, look at this drop. You went from $9 all the way down to like two. That was from last year, and then the last 3 months from 3.6 to like, so that's a 60 cent drop, but not much. And then it just kind of went flat through these months here, and then now pretty much it's down to nothing and no volume. Moving on from that, we're gonna look at the analysis. Let's see what we have, if any quant ratings. Nothing. Now we're going to look at it fundamentally. So we have here, let's see. I don't even have reports for 2024. Only 2023. So I can't do much here for 2024 results or earnings or estimates. I have no numbers for 2024. I guess I'm going to go over 2023, which is kind of old. I mean, I do have past 5 years prior to that. But again, recent data is just giving me better results. Again, I wish I had 2024, but it's not giving me anything. So there's not much I can go off of. So return on investment, it's negative. Earnings are negative. So I'm assuming 2024 was the same. Net margins, definitely negative. Their debts were not too bad. We have 11%, well, close to between 12 really in 2020, and then 27%. It's gone up, then it went down slightly in 2023. Net income, pretty bad. Revenue, it was pretty much flat in 2021 and 2022. Then it pretty much doubled in 2023. Obviously, with all that money outpouring. So then, balance sheet looked pretty decent, but that's something expected for a smaller company on tighter budgets and all that. Cash flow, let's look at that for 2023. So they were actually positive for cash flow. But again, the net income was pretty bad. I don't know how they're doing it. It looks like they're raising money through cash somehow, funding rounds, who knows what. But yeah, uh, not a good company. Not a good company. That's an X. It's supposed to be an X. So moving on to the next one, G-Tech, GTEC. The company name is also known as Greenland Technologies Holding. We have here the volume at 58,000, market cap at 27 million. Very small company. I'm surprised it has for a $2 company and with that market cap and volume, earnings are positive. Book values at 4.4. PE ratio is really low. Excuse me. Everything seems pretty low. So, range, it's only like a $2 range. I mean, something's better than nothing. This company so far has a lot of work to do, but they don't seem like they're struggling in a major way. So just off the basic info, it looks like they're just doing okay. We're gonna look at the chart here. Max chart. So from 2020, it dropped and then it went up again to 15. Then it dropped all the way in 2021, and pretty much after 2021, it just pretty much went down and stayed flat for the next few years. You had a little pop in 2023, but another drop back to its average. I wouldn't be surprised if it does like one more pop and then drop again, but that could be a long shot because of the situation that we're in here in the U.S. We're still a strong currency that dominates the world. So moving on to, let's see here, analysis. Let's see what we have for. We don't have nothing for. Okay, we do have a quants. So it's telling me that it's at a good value and it has quality. So those are the big two. The least one is momentum. So fundamentally, this is what you want to see: a company striving, and that's a little bit for the long term. Uh, so yeah, a small company, they're just trying to survive. So obviously, you want them in the long term. Obviously, bigger companies with like $20 billion or more, they could take a hit and they could actually be traded. So looking at this company, obviously it says they design, develop, manufacture, and sell components. Well, we can open that up and read a little more. Offers transmission products, forklift trucks, logistic applications such as factories, workshop, warehouses. So they have. I'm just reading the description. So they have a variety of different ways how they are making money, pretty much. So that's pretty good. We're gonna look at the financials here. So let's look at some fundamental numbers here. They're look at that. I mean, they're barely beating estimates. So let's see annuals. So for 2024, return on assets was about 11.4. Return on equity 27%. Decent numbers. Margins were at 16.7. Debt 53%. I would like to see that go down. Pay off their debts. And net income we have at 15 million. Whoops. Revenue, it's okay if it remains flat. Looks like that remains flat for the last 4 years. Balance sheet seems okay. Even at that, it almost seems flat, really. Like, the numbers seem okay, but they seem flat. You can see in 2024, their assets have dropped. Hopefully, it was a good move for them. But again, it could have been a valuation as well. You could clearly see 2021 was really good, and then it's starting to like downtrend slightly. Looking at their cash flow, they're having cash flow issues. So you have about 2 mil, negative 2 mil. So that's 33. So about 20 million they're down in cash. What is their net income again? So even if they use their net income, they're down. So they still need work to do. They're okay. They're not somebody to actually look at to say, yeah, I want to own this stock. I wouldn't say it's bad or it's good. Uh, but as for right now, I'd say no. But it has potential in the future if they keep up with their net income and somehow improve on their cash flow. So for GTech, I'm going to say no. It's not a good investment. Next one up, ticker AXL, American Axle Manufacturing Holdings. I think that's the company name. Let's double check that. So that's what it is. Automotive and mobility supplier. We're going to look at the numbers here for the basic info. Volume is at 1.84. The market cap for this is at 484 million. Share price is right now $4.09. We have earnings at 17 cents, so at least they're positive. PE ratio seems pretty high for a market cap that large. PE ratio going forward, they're saying that they're pretty much close to doubling that. It looks like their guidance is actually for making more money, uh, doubling it by doubling it. Uh, we'll see. I mean, anything can happen. Share outstanding, we have 118 million shares outstanding. Uh, and the free float is at 112. See, these are the total shares at 460. And that's what's available. So, 5-year chart, looking at that, we have obviously in 2021 an uptrend. Then you could clearly see it goes up and down, but the overall trend, it's like here. You could look in the middle of it, and then it slightly going down, slightly going down, slightly going down. And so let's go back to that. Slightly going down, and then you could see within that drop right here around. So that was in 2025 of March, and then it slowly creeped up again. It needs to gain momentum. So you had earnings not too long ago, and you see how it's slightly going down again. So they really need to break out that range for it to be popular, even though the volume is pretty high as of right now. But yeah, it looks like it could use some work. Now, let's look at the quants real quick. I don't think they have anything. So value, so meaning the price for this investment is saying that it's okay, better than average. So it's saying it's at a good price. PE ratios though at 23, it's slightly overvalued. Some people might like cheap stocks, but still, I'll wait for another slight drop for this stock. Earnings, you can clearly see they're pretty much borderline on like zero. If I was to draw zero, it would probably be around here like that. Sorry, I messed up on my line. So you have here positive earnings, then positive, then this one's negative. That's bad. Positive, and then hopefully they're estimating for Q2 2025 positive earnings. I'm not going to look at quarterly. They just had positive results all of last year. Not even 1% on the return on asset, 6% on the return on equity. We have 0.28 for earnings, so they were positive. And then looking at prior years, 0.53, 0.05. So this is just a mixed result for earnings. That's not good. At least like the bare minimum, at the bare minimum, I like to see at least positive earnings. I mean, we have a mixed match here. You went from 4.9 negative, then to just at zero, and then you went positive, and then now negative, and then I don't know, mismanagement. That's mismanagement for you. But I don't know. I don't know what they're up to. So positive on the net margins, not even 1%. So we have debt. The debt is pretty high. It looks like they're lowering it, or they're trying to lower it. 91%. Well, from 93 all the way to 88, that's like a 1% drop each year. It needs to do better than that. At that rate, it'll take them like another 40 years to seem pretty decent. Net income, we have 35 million. Revenue, 6 billion. In 2023, they had negative income. Balance sheet is pretty bad. Cash flow, at 455 million. Then let's see here. It looks like they're positive for their cash flow, but they do need work. And the last time they paid out a dividend was in 2008. So for this stock, I'm gonna say no. Even though you have a pretty decent volume for their trading, I wouldn't even trade this. It just needs work. And even though the stock has dropped, that doesn't mean, that they're going to get delisted anytime soon. They just need a lot of work. Last one up we have is CPS. So CPS, we have $25.54. Market cap at 448. Volume is at 330. The chart on this seems not bad. I mean, it started to go up, then went flat. Now I had a breakout. And then the ticker for this CPS, and then the actual name for this company, Cooper Standard Holdings. Let's look at the analysis. So it didn't give me much on the analysis. Again, the chart, see here, it kind of broke out for their earnings. That's pretty insane. $10 increase. That is pretty insane. So earnings, we went from negative, then positive in Q4 2024. Then for Q1, positive, and then Q2, they're aiming for positive. Actually, no. Right here, a negative, pretty much 50 cents, negative 50 cents for their earnings, but hopefully in Q3 they make positive earnings. I don't really want to see a company with negative earnings, but I've seen it happen. Even companies with negative earnings, they're slightly right there, about to be positive, and make profit. So yeah, you just want to be early in the game. So they sell, let's say, manufacture of sealing and fluid handling systems. So I'm not sure what they sell. So we're gonna look at their indicators for finances. I was just looking at something else. I was looking at this number here and a little bit of the income over here. So ROA negative 4.3, 70% equity. Okay, not bad. Margins are negative 3%. They're doing something right. Probably inventory. Who knows? Their debt is awful. Geez, they went in 2020 from 76 all the way to, this company looks like it's insolvent. Net income, negative 78 million. So yeah, that's really big. That is a very big red flag, as well as this number as well. I don't know how it broke out. Maybe it just needs a funding round or something. Aside from that, if their cash flow is awful or they're not at positive cash flow, forget about this stock. This stock is going to tank probably by the end of the year. You might have a few good weeks or a few days for this uptrend to try to make money, but pretty much a pump and dump. Operating, let's see, 76, so 30 mil. So they are 20 million positive in cash flow, but they need to make up for it with that income, net income. So even then, they're still negative for their net income. That is horrible. Hopefully this uptrend with that stock popping up can help them, manage this company better. So this stock needs a lot of work. I'm going to say no to this one as well at $25.48. So that was ticker CPS. I went over four stocks. I hope you guys enjoyed the video. I know, wow, so almost 30 minutes on this video. So you can think about it almost like 7 minutes a stock evaluating it. So there you have it. None of these are actually like good stocks. I would say no to all of these. We'll see when we have more stocks to go over. Thank you guys for watching. I'll see you guys in the next one.